Rivera for having us on this webinar. We're very excited to be a part of it. Just a little bit about our company, just so that everybody's aware, and a little bit about myself. My name is James LaGreca. I'm the Executive VP at DSS Condo. DSS Condo is an owner's representative project management firm that specializes in owner's representation for condominium associations and HOAs. It's our area of specialty. We started out about 15 years ago in the commercial world, performing owner's representation project management for developers and private investors who wanted somebody to take them through the construction process from conception to completion. And then about 6 years ago, we noticed a need within the condominium world for our services, and that was the birth of DSS Condo. Since then, we've kind of perfected the process of navigating through the complexities of condominium construction projects. And for all of you on this call who've lived through a project or two, I'm sure you know what I'm referring to when I say complexities. It could be quite challenging process. So having somebody on your team, on your side, advocating for your best interest is key. We've worked with Siegfried Rivera on many projects where they were the association's attorney. They're the best in the business. I'm sure everybody knows that. We love working with them. They're a pleasure to work with. And they really help us protect our clients when it comes to the contract process and any legal concerns with the construction process in general. Before I hand it over to Robbie, just a little bit about what you might want to look for with an owner's rep. And for those of you who don't know what an owner's rep is specifically, again, we're the owner's advocate. So we're your eyes and ears. We're here to look out for your best interest and keep you out of trouble. And we'll take you through the process: planning, pre-construction, construction administration, right through closeout. Your owner's rep should be a group of highly experienced, highly knowledgeable construction professionals. And with that knowledge, experience, and expertise, they should be able to avoid risks. They should be able to save you money. They should be able to save you time. And that's the type of owner's rep that you want on your side. They have to be independent of all parties. They have to act on behalf of you, the client, manage your budgets, manage your schedules, right? Making sure that the project is brought home on time and within budget. And managing the expectations of your community, which is tough. I always like to say that we're in the business of managing expectations. Just like board members are, just like property managers are, we have a lot of people to answer to, right? All the residents in the building. And we need to manage everyone's expectations properly. So how do you do it? That's through proper planning and proper communication. So that basically sums it up. We're going to be discussing a couple of topics at the end of this presentation, and we'll be able to open up the floor for a little Q&A. So for those of you who have any questions about us specifically, owner's representation in general, or some pitfalls with projects that you may want to try to avoid, I'll be here to answer those questions. In the meantime, I'm going to hand it over to Robbie.
Well, good morning, and thank you, James, for the introduction, and also for pointing out to those participating in the webinar that most of what we need to do to keep us out of the issues encountered by community associations does begin to a large extent through proper planning. And in part, that's what we're here for today, planning and learning what it is to be an association director. And this presentation, while aimed at the directors of condos and homeowner associations and co-ops, could be helpful, frankly, to any of the stakeholders in the community association arena, including managers and owners and even some professionals, because it does shine a light on a lot of the better or best practices that we find in the industry. So before we get into that, as the slide indicates, my name is Roberto Blanche. Many call me Robbie, Robert, Bob, Bobby, and a lot of the other people that I tend to send demand letters to may refer to me as other names as well, but I won't get into those. In any event, the firm that I'm with, Siegfried Rivera, is a firm that I'm privileged to have landed upon back in 2001, not knowing really what condominium law was, though I took an ad. Back then, the jobs were actually advertised in newspapers, and so I responded to a newspaper ad for a position at the firm, and very quickly started learning what condo law was. And that's what I've been doing pretty much exclusively for the last probably almost 20 years now with the firm. I became board certified in the area about 2 years ago. I've handled from the most menial, simple task, or what you would imagine should be menial or simple tasks in a condominium, to the very complex and complicated issues in condos. And at every step of the way, psychology also plays a big role in condominium and homeowner association law. And that is primarily because you have confined a large group of individuals into a densely populated piece of property, which is everybody's home. And so, that leads to a lot of issues. And notwithstanding the fact that it is everybody's home, it is a huge, for many of our associations in South Florida, with the sprawling urban areas and high rises and coastal areas, they tend to be the larger high rise buildings, and they do bring with them their fair share of complexities that pale, that make issues that single family home owners such as myself may confront on a day-to-day basis pale in comparison to some of the more complex systems and issues that you have in your high-rise buildings and your more widely spread communities, HOAs. So because of that, a lot of the stakeholders in these community associations, board members and some managers may become overwhelmed at some of the issues. And then you sprinkle into that the opponents, right? The people that argue or complain, or maybe are just asserting their rights that they have as any owner or representative of the association may have, citing to laws, because now everybody, has easy access to everything by going onto Google and to other platforms. And so you now have a lot more information at the hands of owners and renters and people that want to get dogs into buildings and all these things. And so all of this information has now made everybody quasi condo commandos, and everybody knows what they're doing, and it just becomes a big, complex issue. And of course, the last year we've had this pandemic to also deal with, which has also thrown in another wrinkle into the equation. And it highlights the fact that in this practice area, there are always new issues arising, nuances that we all need to start, pivoting and becoming aware of and learn how to handle them. And so hopefully from this presentation, from a very granular level, we can expand upon that and see what it is to be a board member and why we need to take this course, and what it is that I can and cannot do, or should and shouldn't do. And when my manager tells me, why we can't do certain things, or the lawyer tells us why we can or shouldn't do certain other things, and when James tells us, why we should have a construction manager for these, $3 million, $2 million, $1 million, $500,000 jobs that we're going to do at our property. We should at least listen to what some of these folks are saying, because some of them may have been around the block once or twice before, and it's interesting to see what we may learn from all of that. So what is a condo? What is an HOA? Condos and HOAs, condominium associations, HOAs, homeowner associations, are legal entities. They are corporations that were or are established pursuant to some chapter of the Florida laws that reference what it is that they are, and give them their existence and their validity. With regard to condos, it is Chapter 718 Florida statutes, and with regard to homeowner associations, it is Chapter 720 Florida statutes. So I might refer from time to time during this presentation to the Condominium Act or the HOA Act. Well, it's really not the HOA Act, but given that Chapter 718 Florida statutes is known as the Condo Act or the Condominium Act, then I just informally refer to the Chapter 720 as the HOA Act. So these chapters, respectively, are the ones that establish within the state of Florida the framework pursuant to which condominiums and homeowner associations may be organized, created, how they can operate, what rights owners have in those particular organizations, what obligations do directors have, what officers do we need to have, what kind of contracts need to go out for bidding, what do we need to do with regard to the administration of annual meetings and elections. I mean, it goes on and on and on and on. So we first and foremost want to always be mindful of what those laws provide. Then in the next step, if we're looking at the totem pole of authority with regard to what a condominium and an HOA stakeholder, whether it's a lawyer, a board member, a manager, needs to look at for authority, we look at the laws first. So we look at the statutes. Then with regard to the way the associations are organized, we recognize that they are corporations, as I indicated, and it's mostly, I would say, because those that weren't not-for-profit corporations are very rare and very much at the early stages of the existence of condominiums. So they tend to be not-for-profit corporations, and not-for-profit corporations in the state of Florida are governed by Chapter 617 Florida statutes. And then you have Chapter 607 Florida statutes, which also deals with corporations in general. So you look at all of those. Now, fortunately, I would say maybe a dozen years ago or a little less, the legislature from the state of Florida created a clarification, because there was a great degree of overlap between what Chapter 617, the Not-for-Profit Corporations Act, said, and, for example, what Chapter 718 or Chapter 720 said as it related to condos and homeowner associations, respectively. And therefore, what those legislators did is they created provisions within 617 and 607 that specify that, except to the extent specified otherwise or provided otherwise within Chapter 718 or 720, the provisions of Chapter 617 apply. And so now you've got precedent or preemption in Chapter 718 and 720 as it relates to certain aspects of the operation and governance of not-for-profit corporations when you are looking at those or analyzing those entities from the perspective of not-for-profit corporations that happen to be condominium associations or homeowner associations. And therefore, what we are left with is whatever is not already governed, whatever 718 and 720 don't already address as it relates to those corporations. Then we look into Chapters 617 and 607. In addition to the laws, in addition to the statutes, we are also mindful in the condominium setting of the administrative code. And that is a set of codified provisions established by the Department of Business and Professional Regulation that further expand upon the provisions of Chapter 718 Florida statutes. For instance, we're going to discuss later on the administration of elections in condominium associations, but we will notice that, for instance, what do you do in the event that there is a tie in a condominium association election? You turn the pages of Chapter 718 Florida statutes, and you're going to find that there's nothing there that talks about what you do in the event of a tie in a condominium association election. Therefore, fortunately, sections 61B-15 through 61B-25 were created, and within those provisions of the Florida Administrative Code, we find authority, for example, on many things. Included among them is what to do in the event that there is a tie in an election of a condominium association board, and how you run the runoff election. Now, for both condos and HOAs, the next level of priority, the next level of authoritative documents that we need to be mindful of is what we refer to as the governing documents. And those are the documents that were created specifically for your association, whether it's for your condominium specifically or for your HOA specifically. And those governing documents consist of the declaration of whether it's the declaration of condominium or in an HOA, it might be called the declaration of covenants, regulations, and restrictions, or covenants, easements, and restrictions, or declaration of restrictions. I mean, it takes a number of terms in the homeowner association setting. Then subsequent to the declaration, you've got the articles of incorporation, then the bylaws, then the amendments to any of those documents, and last but not least, you've got the rules and regulations of your association. And typically, the rules and regulations are given the lowest level of order or priority, I guess, in this totem pole that we've been describing, primarily because the rules tend to be more, let's say, provisions that can be adopted flexibly from time to time with little to no input from the owners, usually can be adopted by the board of directors alone. And since they are easy to establish, then the courts have given them a lower level of enforceability and prioritize the other sets of governing documents above the authority and the rules and regulations in the event that there's a conflict or a discrepancy or the need to elaborate upon them. Now, we want to be careful about all these, and what is, for instance, the declaration? Why do we need to have so many sets of documents? Well, each one of these documents plays a different role. So when you're considering the declaration, what that does is it basically is the document that gives that establishes all of the conditions and restrictions of the real estate, of the property. So if you imagine a vacant piece of land, maybe you have a couple acres in the middle of an urban area in the city of Miami, and upon that vacant land, you decide to purchase it for a few $1,000,000, and you have the wonderful idea of saying, well, I mean, I purchased this piece of land and I can build myself a beautiful mansion, or I can build a 50-story building and sell it and subdivide it into 300 different units or 400 different units and sell it to 400 families and maximize my return on the investment that I made in purchasing this property. Well, in order to build that large building and in order to manage what it is that you're going to do with all those 400 owners and the 400 different units, well, if you bought one piece of land, it's easy. You had one deed. You have that one deed and you can sell it to the next person. Well, but if you're going to do a 400 unit condominium tower, you can't just rip up that deed into 400 pieces and give one to each other. You need to find some way of establishing, of creating a legal documentation, a legal document that recognizes the existence of this structure, recognizes where the boundaries of each individual unit may begin and end, what other areas are going to be shared by and among all of the other owners. Who is going to run this property? Is it going to be all 400 owners, and that could be chaotic, or is it going to be just one guy or three ladies, or so all of these types of parameters and all of these types of issues we need to basically establish in the declaration. And the same thing applies to an extent with the homeowner associations. Then you have, well, okay, let's assume we've got this piece of land, we created this declaration, we established all these 400 units, and what type of restrictions apply to the 400 units, and whether you can have pets or not. And if you're going to buy units, do you need to get approval from the people that live there or not? And can you lease units there once you buy them? And is there going to be a pool? Is there going to be a gym? Is there going to be a marina? All of these provisions are established in the declaration. The next question is, who's going to make sure that you follow all these laws? Is it going to be, some informal tribunal of the 400 owners that, has to be convened on a periodic basis? Or are we going to come up with some other organized format to do this? And so in doing so, what we're going to have to do is we have customarily realized that what is created is the declaration establishes that the affairs of this real estate are going to be governed by a corporation, which is referred to as an association. And it is an association made up of all of the owners of the real estate, all of the owners of the units in this property. And by virtue of creating this association, we designate that it's going to be a corporation, and it's going to be a corporation not for profit, because this association, this corporation, is not in the business of making money, but rather it's in the business of not making money, hopefully breaking even, because while there may be expenses to run and operate this huge piece of real estate that has now been developed, we realize that the people that are going to pay for that are the owners, and we want to make sure that we give and pay as much as what is needed to run that property, to run that building, to run that operation. But we don't want to overpay, right? Because if we're overpaying, then we as individual owners are taking money out of our pocket that we otherwise could have used in our own day-to-day life. So, with that in mind, we create this corporation as a corporation not for profit. And that's why it's governed by Chapter 617. And within this concept of establishing the corporation, when you look at Chapter 617, it says, well, in order to create the corporation, you need to file with the Division of Corporations, with the Secretary of State Division of Corporations, a set of articles of incorporation. And in those articles of incorporation, the person who's creating this corporation, the developer, the original owner of this land, is going to indicate how many, who's going to be a member of the association, who's going to have the rights to vote for certain things, what is their vote going to be worth or weighted, who's going to be the leader of this group. Is there going to be one person? No. Typically, what these developers do is that they establish that a board of directors, an elected group, appointed group of individuals, is going to be appointed to oversee most of the day-to-day affairs of this entity. And those individuals legally don't need to be owners, according to Chapter 617 or Chapter 718 or Chapter 720 Florida statutes. They just need to comply with whatever restrictions or whatever obligations or conditions are established within Chapter 718 or 617 Florida statutes. But then that's what the purpose of the Articles of Incorporation are. And then the bylaws, okay, the Articles of Incorporation are going to say that most of the procedures of what this corporation does, right, how these directors are elected, what do we need to do as far as the accountability of the financial affairs of this association? When do we need to adopt a budget? What needs to be included in the budget? What about financial statements? So on and so forth. All of that is generally established in the rules. Let me not say the word rules, but in the document that includes all of these procedures for the corporation, and that is what you call the bylaws of that corporation. So it's to understand that there is a different purpose, theoretically speaking, for each one of these documents that we've described. And then lastly, the rules, as I indicated earlier, are intended to be more flexible, to further elaborate upon what the deck articles and bylaws provide, similar to what the state of Florida did with the administrative code. They said, we have these statutes. It takes not an act of Congress, but an act of the state legislature to adopt these and revise these statutes. And it is a difficult process to achieve. But we realize that from time to time, and in between changes to the statutes, there might need to be a further elaboration or clarification to the statutes. And so because of that, you created the administrative code sections. Well, similar to that, there may be the need to further elaborate or expand upon already existing provisions of the governing documents. And so the board of directors is empowered to adopt rules and regulations which cannot conflict with the provisions of the declaration, articles, or bylaws. They cannot be unreasonable. So these rules and regulations have some type of standards that need to be applied to them when they're being created and adopted. But they are an additional layer of restriction or regulation that board of directors do have at their disposal in order to create some parameters within which we hope to keep the relative peace within our respective community associations. So that gives an overview of the legal makeup and the groundwork for the creation of community associations such as condos and HOAs. Now, this slide that is on the screen now is entitled Official Records, and we've got it at the beginning of the presentation because it is one of the areas that is most regulated and most governed by the state of Florida as it relates to condos. Because as we will notice later on, the Division of Condominiums is a subsection of the Department of Business and Professional Regulation and has been given statutorily, pursuant to Chapter 718 Florida statutes, the authority to oversee administratively a number of the complaints that owners within the associations might have. And one of the biggest areas that are the subject matter of many of these complaints tends to be that related to official records. And not too long ago, there was this Miami Herald article or an expose that came about of a couple condominium associations in Dade County, Florida. And those of you that are in the other counties of the state that are listening to us, don't think that you guys get away with this, because it may have been most obvious in these two associations, but some of these issues were subsequently determined to have also become problematic or issues at other counties as well. And what happened is that there was a good amount of investigative journalism by a reporter at the Miami Herald that identified a lot of schemes that were going on between vendors, property managers, some board members, in order to retain control of associations, in effect, keep control of the budgets and the bank accounts of these associations. Presumably, there was some ill-intended motive behind that. But what a lot of these players did in this process is they were alleged to have prevented other owners from having access to records. They were alleged to have prevented other owners from getting responses to the inquiries they were submitting to management and to the association. Supposedly, they were not allowing participation by these owners. There was also some accusations about rigged elections of those community associations in order to allow the incumbents to retain control of those boards. And as a result of this investigative journalism, the state of Florida, the legislature appointed committees and actually did some statewide town hall meetings. So some senators and state representatives went throughout the state and started listening to a good number of their constituents as to some of the practices that were going on. And following those town hall meetings, a report was drafted. In fact, there was actually a the Miami-Dade County State Attorney's Office actually convened a grand jury, if I'm not mistaken, and submitted an indictment of the condominium industry. Let's say the property managers and the board members in general of the county, and in turn made a very assertive recommendation to the legislature to enact a number of laws to benefit the owners and transparency and participation in associations. And key recommendation within those reports was that for the access to records. And following that grand jury indictment, following that report to the legislature, following the acts, the legislative bills that were proposed as a result of those efforts, we did happen to obtain from the state legislature a number of laws that were aimed at greater access to the residents, to the owners of units in condominium and homeowner associations. And here on the slide, we have a lot of these. And that's why nowadays condominium associations with 150 units or more that are not timeshare units are required to have websites. And these websites need to include a great degree of the associations, of the condominium associations official records. Now, please note that while I do reference that there is a need for the condominium associations to have websites, at the time, it only applies to 100 and to condominium associations that have 150 units or more. And it doesn't apply to homeowner associations, notwithstanding the fact that I do know that a lot of homeowner associations do have websites. And so when you're thinking about official records for the association, you've got to think that almost anything, almost any document, whether it's an email, whether it's a contract, a letter, a ballot, an agenda, the minutes of the meeting, I mean, almost any record is an official record of the association. And the statutes do delineate and enumerate specifically what is an association official record. But both in the Condominium Act and in the HOA Act, there is a section at the end of that list, which is what I describe to be the catch-all provision. And it, in effect, references in general any other document that relates to the affairs or the business of the association. And the exact terms are not those that I've said, but the concept is that it does contemplate wrapping in any other record that might exist. And so conservatively speaking, I tend to think that if it has to do with the association, then and it's a document, whether electronic or physical written document, it becomes an association official record. The next question becomes, and the next important issue with regard to official records is that in the interest of transparency, unit owners are entitled to inspect association official records always. There is an exception, of course, and they are both mentioned in the Condominium Act as well as in the Homeowner Association laws, and that is that there are a specified group of documents that are considered not accessible to the owners and are protected. And for example, some of these may be records that are attorney-client privileged, or other records might be records that pertain to or have reference to medical or healthcare information that is protected, or some documents obtained in the process of approving a purchase or a lease of a unit. And so you might have, for instance, social security numbers, you might have bank account numbers, you may have telephone numbers, email addresses. A lot of these are specifically delineated in the statutes and are not accessible to the owners. And my recommendation usually has been, notwithstanding the fact that you are obligated as an association to maintain those association official records, because the law does require you to maintain them, you don't want to run the risk of producing those records inadvertently to an owner who has the right to inspect them. And so what you should do is, while you've got to keep them, and you might have, for instance, a unit owner file, then take a look at that unit owner file and make sure that what is included inside of that unit owner file is or is not protected. If it is not protected, just let it be, leave it in the file. If it is protected, then it might be good practice, for instance, to either put a sub-file in that file or a large envelope within that file wherein you put the protected documents. This is important because whenever an owner submits a written request to inspect association official records, you have 10 business days within which to make those records available for their inspection. And if you don't make those records available for their inspection, then they can pursue legal action against the association and recover damages, whether it be attorney's fees or other type of damages resulting from that. Similarly, if there's a legal action that is pursued in connection with any matter and an owner has failed to be provided with access to the records, then the association's failure to provide that owner with access to the records in connection with the subject of that claim may prevent the association from recovering prevailing party fees. So there are implications as to whether or not an association provides fees. So let's keep that in mind. Now, another key point is the condo board meetings and members meetings. And the relevance of this is that most of what happens in associations needs to be performed by the board. Just by virtue of the way condominiums are set up, boards run and govern most of the affairs of the association. And it's not, for those who might consider it to be an unfair process, it really isn't too remote from our day-to-day life. You know, our own federal and state and even local governments are not governed and operated by the exclusive word of the people, but more so by a representative body, which are those people that are elected by us, the residents, by us, the citizens. And similarly, that's what happens in a condominium. And so the way boards need to act is by board meetings. And those board meetings need to be properly noticed. There needs to be a designated number of board members present at that time in order for there to be a quorum of board members for business to be conducted. And then once you do achieve a quorum, once you've given proper notice of a board meeting, then you need to have a certain number of board members vote on a particular item in order for the affairs of the association that were voted upon at that meeting to have been adopted. So if you want to hire a company, you can't just ask your property manager, hey, go get me a proposal from XYZ building painting company and give me the proposal and let me sign it. That's not the way it's going to go. You get yourself certain bids, right? You need to ask yourself, is this going to cost me more than 5% of my budget, including reserves? If it does, you're going to need to get bids in a condominium association. And if you have to get bids, then the board's going to have to pick one of the vendors that submitted the bids. And that decision, that determination, that selection process can't just happen by board members sending each other emails. It can't just happen by board members signing a napkin and saying, I like company X, or I like, painter B. You need to schedule a board meeting. You need to send out a notice, or post the notice of the board meeting somewhere conspicuously on the property. That notice must indicate time, place, and date of the meeting. It must also have an agenda. Why? Because you need to make sure that the owners that are within your community have a right to participate in that meeting. They have a right to attend that meeting. They have a right to know what's going on. Remember, we're talking about transparency, and we need to know, or they need to have an opportunity to understand why it is you're thinking of hiring this painter. What is the painter going to be doing? How much is this going to cost? And they have an opportunity to speak on whatever is on the agenda. And so, that is all going to be done at a board meeting. And even though the owner doesn't have a right to vote on who the painter is going to be, he or she does have an opportunity. He or she does have the right to voice their opinion, concerns, or recommendations at the board meeting. And I would suggest that the concept of allowing them to voice their concern, opposition, recommendation at the meeting is to happen prior to the time that the board has made their vote on a particular agenda item. Because to me, it seems illogical to reserve the opportunity for owners to speak on an item to the end of the meeting when all of the votes have already been taken. Then what would be the purpose of allowing an owner to speak on an item? If the purpose of allowing an owner to speak on an item is to give them the opportunity to address a subject matter on the agenda, then it would only make sense that their opportunity to speak take place prior to the time that the board has voted on an item. Now, there are some exceptions to the 48-hour notice posting rule, as indicated on your slide. Some types of meetings, like non-emergency special assessments, amendments to rules regarding unit use, budget adoption meetings, need to be sent out 14 days for condominium associations. For members meetings, you've got notices that are a little bit different, because while boards have the 48-hour notice with the agenda to be posted, I gave you those special notices, right? Those special circumstances that require 14-day notice and mailing of the notice to the owners. In the context of members meetings, those notices always need to be sent out to the owners. It's 14 days notice in order for the members to vote on something, right? What do the members need to vote on? Well, for example, amendments to documents, amendments to the declaration, amendments to the bylaws, amendments to the articles. The owners might have to vote on whether to allow the building to be painted in a different color, or the members might have to vote on whether or not to authorize the association board to use reserve funds for some other purpose. And so there are a limited set of circumstances in which the owners, members, may have an opportunity to vote on certain matters. And so in order for the members to vote on those certain matters, you need to have a quorum of the members. It's usually a majority of the voting interest, though you can have a lower number established in the governing documents. For HOAs, you're looking at 30%, and that is set by statute. So in HOAs, they're making sure that you can have a lower number in order to meet quorum. And then we've got this concept of proxies. Well, proxies, in effect, is a fancy way of saying, you've got this document that represents that you're allowing another individual to attend the meeting on your behalf and vote on your behalf in your place at that meeting, right? They're stepping into your shoes at that meeting to vote on whatever it is that they are authorized to vote upon at that meeting with that document. Some proxies are good only for the purpose of establishing quorum, right? So maybe you can't go to a certain meeting, but your neighbor is willing to go on your behalf, and you give your neighbor your proxy so that they can appear on your behalf. Well, it may be that your neighbor's ability to appear on your behalf is limited only to just confirming your presence, your participation, your virtual participation at that meeting, your representative participation at that meeting. But maybe that proxy or maybe the governing documents of your association don't allow the use of proxies for anything else. Similarly, there are other instances in which you can use proxies for voting. So for example, as I mentioned earlier, maybe the unit owners, maybe the members are going to vote on allowing or approving the alteration of common elements to look different. In those cases, what we would ask the owners to do is to submit what is called a limited proxy. And limited proxies is what the condominium associations are allowed to use to provide owners with the opportunity to have their votes on voting matters, not board meeting elections, okay, but the other types of votes cast when those owners cannot appear. So if it is not an election of board members, okay, if it is a non-electoral vote that is taking place, and you as an owner in a condo cannot show up, but you want to make sure your vote is casted, your association might be able to use a limited proxy, which you can give the authority to some third party, some third person to show up on your behalf, be counted toward quorum, and also cast your vote limited to the manner in which you have specified on that limited proxy. So the limited proxy will have a section that will appear like a ballot. And it would say, for example, are you in favor of voting for or against the material alteration? And it'll have two boxes. And then you will check off either for the alteration or against the alteration. And therefore, your proxy holder can show up and vote at that members meeting on your behalf, but they can only vote as limited to the manner that you indicated in your proxy. In an HOA is different. You can use proxies for the most part, and HOAs are not restricted unless the governing documents for the HOA specifies as such, but the statutes do not limit the use of general proxies in HOAs for voting. So in HOAs, you can use proxies unless the governing documents specify otherwise. You can use proxies for any type of member vote, whether it's an election of directors, whether it's an alteration vote, whether it's a vote on amendments, whether it's a vote to use reserve funds for some other purpose. So that's a key distinction between HOAs and condos when it comes to proxies. The slide now addresses condominium election of directors, and it's a little different between condos and HOAs. So first, in condos, you need to have, you'll realize that you get two notices for condo elections. You get the first notice and the second notice. The first notice is sent out like 60 days or more before the election. The second notice goes out like 14 days, no later than 14 days before the election. So there is this more convoluted process in condos. The concept is a tedious one, but it makes sense given that you're not allowing unit owners at a condo election to vote by proxy. Okay, you must vote at a condo election by a secret ballot. And so the first notice is intended to provide the opportunity for nominations to be made. So you get your first notice. It's an invitation to nominate yourself. It's an invitation to submit your candidate application form if you're an eligible individual, and you submit it to the association. It must be returned not less than 40 days before the election, and then you have an additional 5 days to submit your resume or your candidate information sheet. And then once a determination has been made as to whether or not there is going to be an election, okay, then the second notice must be sent out not less than 14 days before the election for a condominium association. So you will know if you're going to have an election in a condominium association by the time you are 40 days away from the election, because that is the deadline by which all of the candidates must have been nominated. That is the time by which everybody who is interested in serving on a ballot or running for election to a condominium association board must submit their application form to the association in order to be listed on the ballot, and they must be eligible to serve for election as of that date. So that's a critical thing to keep in mind. If you are going to have an election, in other words, if you have received candidate application forms that exceed the number of vacancies you're going to have on your board, right? If you have a 5-person board and you receive 4 candidate application forms, you're not going to have an election. But if you have a 5-person board and you received 6 or more candidate application forms, then you are going to need to have an election. And therefore, with your second notice of the annual meeting, you will send out your ballots. And together with the ballots, you must send out ballot envelopes for the condominium association election, which consists of an inner ballot envelope, an outer ballot envelope, the ballot. You could submit proxies to achieve quorum at the election. You could submit voting certificates, and you must include an agenda outlining the topics for the annual meeting, which, if you're having an election, must include the election. Now, I mentioned this 2-envelope system, and that is because in condominium associations, the statutes mandate a secret ballot form. And so the ballot itself is regulated in the statutes. The candidates must be listed in alphabetical order by order of last name, first name, last. You cannot require an owner to sign the ballot, because when we look at a ballot, once all the envelopes have been opened and we look at a ballot, we are not supposed to know who that ballot or from whom that ballot was received. And so while the owner has the ability, if they choose to put their name on the ballot, we or the association cannot create the ballot in a manner that would require or suggest that the owner must identify themselves on the ballot. So when the owner receives a ballot, the idea is they vote for their candidates. Presumably, they're not going to vote for more candidates than there are vacancies, right? So if it's a 5-person board, there are 10 candidates. If they vote for any number of candidates up to 5, it will be acceptable. But if they vote for more than 5 candidates, their ballot isn't valid. So they'll submit their ballot in what we call the inner envelope. They put the inner envelope in the outer envelope. And now it is in the outer envelope where the person fills in their personal information. They print their name. They sign their name. They put their unit number, so that when we receive all of these in anticipation of the election, we, the attorneys or the election monitors or whoever is overseeing the validity of this process, is going to look at these outer ballot envelopes and is going to say, and compare it to the roster and make sure that we've received only one from every, or from each unit that voted, right? No owner, no unit may have submitted more than one. If we received more than one, we're going to have to decide which one came first. If we can't decide which one came first, we need to invalidate them both. Once we've determined on the outer envelopes that, who submitted votes, then we need to see if there's 20% or more. If there is 20% validly cast ballots, then we have an election. If there is less than 20%, no election. Notice that this is different than a quorum. The election process for condominium associations is dependent upon the number of ballots you receive, whereas an owner's meeting or a members meeting in a condo is dependent upon whether or not you've achieved quorum. Those are two different concepts. So for purposes of the election, if you've achieved quorum at your annual meeting, then it is inconsequential to whether you've got your election, because you could achieve quorum but not achieve your 20%, or you may achieve your 20% of the ballots submitted, but you may not achieve quorum. And in any one of those instances, the ability to achieve quorum has no impact on whether or not the election can take place, and vice versa. Your ability to achieve the 20% ballot threshold doesn't impact whether or not you have your annual meeting. And so it has happened on numerous occasions that we have had an election in a condo association annual meeting. We have had an election, but we haven't had a quorum of members present. So those are key things to keep in mind. Once we open up, once we certify that the 20% has been met, We open up all of the outer ballot envelopes first before we open up any inner envelope. Okay, that way we've separated all of the inner envelopes and they're all put to a side. Those inner envelopes, I don't know, and I'm not supposed to know how any individual owner signed, because they shouldn't have put their name on those inner envelopes. They shouldn't have put any indication there. They shouldn't identify their unit. They shouldn't have put anything on that inner envelope that gives me the ability to see how they voted. Then once I finished opening up and separating all of my outer envelopes, I open up my inner envelopes. I open up the ballots, and then we can start counting the ballots and tabulating the results. Whoever receives a plurality of the votes, which means the higher number of votes, are the individuals that are elected, because a plurality is different than a majority. A majority, if there were 100 votes cast, a majority would be 51 votes. But if you have, let's say, 10 candidates, the candidate that wins and the candidate that may have received the largest number of votes doesn't necessarily have to get 51 votes. In this example, he or she could have received 40 votes, which is less than a majority, but that was the candidate that received the highest number of votes. And so the candidates that receive a plurality, in this example with a 5-person board, the 5 candidates that receive the greatest number of votes will get on the board. They will be on the board for a term, whatever that term is. Most condos have a 1-year term, which is a term from annual meeting to annual meeting, or election to election. So from the 2020 election until the 2021 election. Some associations have staggered terms of 2 years or more, but that needs to be specified in your governing documents. There is this notion of term limits in condos. There is no such notion in HOAs, but what I do want to specify is that the law that established term limits in the state of Florida for condominium associations starts running in 2018. So July of 2018, any director who starts serving continuously on the board for 8 years from July of 2018 forward will then be prevented from running or being elected again to the board subsequent to that. Okay, so subsequent to the 2018 election, 8 years after that, unless there are no other candidates running for election, or unless they have received 2/3 or more of the votes in that election. Okay, so those are the ways that they can exceed the term limitation in condominium association elections. HOA elections, a little bit different. And I also want to pause for a second just to mention, I'm doing my best to, we have a lot of ground to cover, so I'm doing my best to run through the presentation as much as possible. But as Stephanie indicated earlier, if you want the presentation, you can get it because it will highlight some of the nuances that I may have glossed over. HOAs elections are a little bit different, as I started addressing earlier. They must take place at the annual meeting. And whereas I indicated for condos that you needed ballots cast from 20% of the eligible voters at a condominium in order to have an election, that's not the case in an HOA. In an HOA, the election is going to take place at the annual meeting. You need to have a quorum of directors, strike that. You need to have a quorum of members present for the annual meeting. You could vote by proxy in a homeowner association election, whereas you cannot vote by proxy in a condominium association election. In a condominium, if you can't make it to the election, you could submit your ballot ahead of time. In an HOA, you don't usually, and I say usually because there may be exceptions depending on what your governing documents provide. So the way you run an election in an HOA, there tends to be a norm, but there could be some deviations from that depending on what your governing documents provide. In a condominium, you tend to go by what the statutes provide, and there's really not much norm within the governing documents, or not much wiggle room for you to deviate from that. So those are nuances between condos and HOAs. So in an HOA, you need to have a quorum. You could vote by proxy. You don't have that 2-notice system. It's usually a 14-day notice by default, though your governing documents could provide otherwise. you could vote by proxy, you've got your notices, and candidates, how are candidates considered at HOA meetings? Well, there is the ability to have candidates submitted before, but that concept of submitting nominations, making nominations for a homeowner association meeting, that concept can take place and can be done if it's done or provided for in the governing documents. But for the most part, most HOAs don't have that. Most HOAs just go by the default election process that is contemplated by the statutes, contemplated in the governing documents. And so candidates typically for an HOA are taken from the floor of the meeting. So the annual meeting takes place. When you get to the item on the agenda for the annual meeting, then you open up the floor so that anybody who is interested in being nominated or nominating themselves to be considered for election to the HOA board has the opportunity to do so. And once all the nominations are made and the opportunity to make any new nomination is closed, then the candidates are typically provided with the opportunity to present statements to the venue, to the forum, to the people that are present at the meeting. And at that meeting, once that opportunity to present statements is closed, and once all statements have been made by candidates, then the members can vote for the candidates. So those are very quick overviews of the differences between condos and HOA meetings and condo and HOA elections. Now, moving on this slide, I think we've covered most of the issues here. I do want to mention in the last point for HOAs, and it also applies to condos, this concept of board member certification and education, which is what we're doing here. This is a board member certification course. And within 90 days from having been elected or appointed to the board, whether it's in a condo or in an HOA, the director must have either signed a written certification form or have partaken in a board certification course and provide the certification of compliance with that requirement to the association, which would be maintained by the association for the tenure of that director's uninterrupted service on the board. So that way you do this once, right? You don't need to do this every single year, though you're free and welcome to do so. And frankly, though many of you chose to be here, whether you knew or didn't know, you do have the opportunity or did have the opportunity to submit a certification form and just bypass having to take this course altogether, though you would have missed out on all of this riveting and intellectually stimulating information. So I guess those of you in this course are the elite academics that wanted to know all of these nuances of community association establishment and operation. Another key feature, an area that board members should be aware of, is the concept of financial reporting, which does need to happen in both the condominium and HOA setting. And the standards are up there on the slides. Your financial reports in a condominium association must be filed with the association and made available to the owners or sent to the owners. And there are timeframes within which to do so. You have, depending on the type of condominium that you have the ability or the requirement, let me say, not the ability, to have them audited, though you can either waive audit, by vote of the members or request of the members, or depending on how large your association is, or how many units, or the monetary threshold of your financial statements of your budget, it's actually your revenues. You may be able to get away with a less I don't know if the right word to be would be less formal or less intensive review. You can either have a compilation or a review instead of an audit if you meet a certain threshold. With that said, most of our clients are required to audit or choose to audit, and so the financial statements, once audited, are required by law to be submitted to the owners. In an HOA, within 90 days after the end of the fiscal year or annually on the date provided in the bylaws, the association or a third party shall prepare a financial report for the preceding fiscal year, and the financial statements shall be prepared in accordance to accounting principles as adopted by the Board of Accountancy. These are procedures established in the respective statutes for condominiums and for homeowner associations. They're technical, they're there. And additionally, the administrative code, as I mentioned earlier, I made reference to the Florida Administrative Code sections, what we call the division rules for condominium associations, does provide additional guidance and additional authority on budgets and on financial reports. Recalls on the slide is the process by which directors can be removed. And I oftentimes receive questions from clients seeking to have clarity on the way a director may be taken off of the board, whether it is because that director doesn't know what they're doing, whether it's because that director is a nuisance, whether it's because that director may be perceived to have a conflict of interest, whether it's because that director, there's any number of reasons that I receive this inquiry. And at every step of the way, I tell my clients that in order to be a director, you must be eligible to be a director. There are very few and limited grounds by which you are automatically off the board. Some associations, for example, may require as a condition of eligibility that you own a unit in order to be on the board. For instance, that you own a unit in the condo or you own a lot in the HOA, and the moment you sell that condo or that home, you are now determined to be ineligible to continue serving in that capacity. Well, as a result of that ineligibility, you are automatically off the board. But nobody took action to remove you. You knew that was a condition of eligibility. You needed to keep it. There is also a requirement that you not go for more than 90 days delinquent once you become a board member, that you not go for more than 90 days delinquent in the payment of any monetary obligation to the association. And so if you do, then you are automatically off the board. Also, we just mentioned right now, you've got to take a board certification course or submit a signed certificate within 90 days of being appointed or elected to the board. If you fail to do so within those 90 days, you are automatically off the board by law. With regard to this capacity, if you are automatically off the board by virtue of not signing that certificate or not taking the course, then you can get back on. You will be back on the moment that you comply with that requirement. But for all other purposes, the only way to get rid of you as a board member is by recall. And that is basically, there's two processes of doing that. We're not going to get into them in detail, but suffice it to say, one of those processes requires a members meeting to be scheduled, held, and the owners in the building, the members of the association, a majority of them must vote at that meeting to have any one or more of the directors recalled. If a majority or more of the board members are recalled, then the board members strike that. Then the unit owners voting for recall can replace the directors removed. If less than a majority of the board was removed by recall, then the remaining board members can fill those vacancies that result in the recall. The other way of having a recall is by what is called a written agreement. Now, it's not a petition. There is a form. It's a one-page form. It is on the Department of Business and Professional Regulations Division of Condominiums website. And it is basically a state-mandated form wherein an owner indicates who they want to remove, who they want to replace if a majority or more of the board members are subject to recall, and they sign their name, print their name, put their unit numbers, pretty much the same thing they put like on a ballot. And that form is given to an individual who is usually like the ringleader of the recall effort, and that's the representative of the unit owners voting for recall. And that representative will collect as much of these recall agreements as he or she can, and he or she will serve them. He or she will deliver them to the association. Now, that could be the association's manager, a board member, the association's main address, a service processor could serve it upon the association, maybe even the lawyer for the association. And once it is served upon the association, then if it is a majority or more of the owners that submitted those recall agreements, then the board is subject to recall. Now, we talk about ethics in this slide because it is a very big issue in condominium associations, and one of the more recent legislative sessions within the last handful of years that produced a large number of new laws was basically the result of what we described earlier, right? That grand jury indictment from Dade County, the state legislators, and tour across the state, and town hall meetings with condos and condo owners, where they revealed a lot of the problems that were taking place. And so a lot of these issues were embedded and now put into the condominium laws and into some of the HOA laws. And so you've got what are HOA anti-kickback provisions, and then you've got criminal charges against board members and criminalization of certain acts within a condominium association setting. You look at a lot of these things, and you see most of these things are kind of like no-brainers, right? An officer, director, or manager may not solicit, offer, or accept any good or service of value for his or her benefit. A director who violates this provision, the board shall immediately remove the officer or director. The vacancy shall be filled according to law. An officer, director, or manager may not accept food to be consumed at a business meeting with a value of, I would say it's more than $25 per individual. So, so you can eat if you can accept food if it's less than $25 per individual, but if you can't get a fancy meal, basically, is what this provision is specifying. In the middle column, a director or officer charged by information or indictment with a felony or embezzlement offense involving association funds shall be removed from office. Now, it's important to note that this section doesn't even say if you've been convicted. If you've been charged by information or indictment with a felony, theft, or embezzlement offense involving association funds, you are automatically removed from office. So that's interesting to note. It doesn't even require a conviction if it pertains to association funds. If the charges are resolved without a finding of guilt, then the director or officer shall be reinstated. An association member who has such criminal charges pending may not be appointed or elected as a director or officer. And then, of course, you now have on the third column reference to new statutory sections within Chapter 831, Chapter 812, that were created to specifically address condominium-related circumstances: forgery of ballot envelope or voting certificate, punishable by as felony of third degree in accordance with Section 831.01 Florida statutes. Notice that's not even in Chapter 718 Florida statutes. That's a new criminal section created for these types of condominium issues. Theft or embezzlement of funds, punishable based on amount of theft or embezzlement in accordance with Section 812.014 Florida statutes. So important to keep that in mind as it relates to condominium associations and what you can and cannot get away with. Penalties for violations on our next slide. If you don't comply with the association's governing documents as an owner, if you violate some of the obligations with which you are required to comply, then what do you do? Do you, do you take every owner to court? Do you have to file lawsuits? How do we impose fines, suspensions? We've heard about any number of these issues, right? So what we're looking at here are basically remedies for the enforcement of community association or governing documents. And so those remedies might require or may force you to file for arbitration or mediation. Non-binding arbitration or mediation is mandatory in HOAs, for instance, and in condominiums in certain capacities. Mediation is also mandatory at a certain point in the process. You can also resort to fines, right? You can ask for the imposition of fines. You can suspend the right of an owner to use or the right of a tenant to use certain common elements or association property. You could suspend voting rights. You could in certain instances as referenced in the slide that you are looking at here. Now, it's important that while these are all remedies that are available to associations, it's not just as easy as doing it. You can't just say owner of unit 504 didn't take out their trash and $500 fine is imposed against them. No, there are procedures as to the imposition of fines. There are procedures as to the suspension of use rights. There are procedures as to the suspension of voting rights. And so we need to make sure that we comply with all of this. There are limitations on the amount of fines. So we want to focus on this slide in particular because as board members, you don't want to ever make the assumption that an owner can automatically be fined for violating a provision of the governing documents. So, keep in mind that in order to impose fines, you need to have a committee of owners. And it's other owners, it's non-board members and non-board member spouses. So you cannot impose a fine automatically against any owner for violating the governing documents. What you must do first is provide them with a proper notice that is specified in the statutes. You must provide them with the opportunity to attend a hearing or on that proposed fine, 14-day notice. The committee must determine whether or not the fine may be imposed. And if the committee has voted that the fine may not be imposed or that a lower fine must be imposed, the board needs to abide by the committee's determination. So this is a very key issue in associations and one that I have found to be violated all too often. The same type of procedure applies for the suspension of use rights of common elements or common areas. The only exception to the suspension of use rights is that if the suspension is based upon your non-payment of a monetary obligation, if you have not paid a monetary obligation for 90 days or more to the association, then you don't need to have a committee hearing or a 14-day notice for that suspension. Similarly, if the board is suspending your voting rights due to your non-payment of assessments or other monetary obligations that might be due for more than 90 days, there's no need for a hearing or 14-day notice. But for any other type of suspension, any other type of fine, you must have that notice, you must have that committee hearing. And I did talk about suspension of common elements use or suspension of common area use. Keep in mind, you cannot suspend the use of utilities. So you can't cut off their water access, you can't cut off their power. The jury's out on whether or not you could cut off their cable. You can't prevent an owner from using parking spaces. You can't prevent them from using limited common elements to which they have exclusive use. You can't suspend their ability to use elevators. You can't submit their ability to walk through the stairwells. God forbid you do that. How are they going to get out of their units in the event of a fire? So these are all important issues with regard to the suspension and the enforceability of certain remedies in associations. Estoppels and certificates of estoppels are also a key issue governed by the statutes very strictly. The association must provide them within 10 days. Associations are required, and this is primarily for condos, required to provide on the website the identity of the person or entity to whom the request may be sent. Of course, this presupposes you're required to have a website. There's also restrictions on what you can charge for these estoppel letters and certificates, because it was an area that was highly abused by many condos historically. So now the legislature has regulated this, and so there is a limitation capped at $250 unless you're requesting the fee, the estoppel on an expedited basis, in which case you can add an extra $100. So now you're up to $350 if you're asking for it to be expedited. If there are delinquent amounts, then the association can charge an extra charge of $150 because they may have to add, what those additional delinquent amounts are. The fee may not be charged if the estoppel is not provided within 10 business day deadline. So keep in mind, you do need to provide this within 10 business days. If not, you lose your ability to charge a fee for this, notwithstanding the fact that you retain the obligation to provide the fee and the estoppel. The board of directors is also required to pass a resolution for the establishment of the authority to charge a fee for the preparation of the estoppel letter. So take a look at the slide on the estoppel fees and whatnot, because it is very important. Condo insurance, also very important. Some of it is mandatory, some of it is optional. But even what is optional, I would say it's almost a no-brainer that you need to get that type of insurance. So, keep in mind directors and officers insurance, for instance. Any condo that doesn't have D&O or directors and officers insurance, I would say is crazy. So you should consider having flood, even though you're not legally obligated to have it. You should consider to have insurance for the benefit of association employees. D&O, I would say, is a no-brainer, not that pricey, and I can't imagine any of you volunteer board members or officers serving on a board if you don't have directors and officers liability insurance. So keep an eye on that. What do you have to have? Fidelity bonding, property insurance, what is called hazard insurance for your condo. Those are required to be had. All of these policies, mandatory that you make them available for inspection. Insurance assessments on the next slide is another slide that you should all be mindful of, and it further elaborates upon what I just discussed and described to you guys, the participants. The next slide, which is the turnover process for those associations that have recently turned over or were controlled by the developer not too long ago. There is a procedure established in the condominium laws requiring when it is that a developer must let go of controlling an association's board of directors. And how is it that they control a board of directors? Well, initially, when they create the association, they have the ability to appoint all of the members onto the board. And so at a certain point in time, and there are certain criteria that the statutes reference, that board member must relinquish control of the association's board. The same applies in an HOA, but the procedures for HOA turnover, as indicated on the next slide, are going to be a little bit different than what triggers condominium turnover. To me, what is most important about condominium and HOA turnover is that it is the time that signals the passing of the baton, let's call it, or the gavel from the developer to the unit owners. And until that time, the unit owners really didn't have much of an opportunity to control their own fate, their own destiny of their own investment in condo. Whereas now, post turnover, the owners could select their leaders, and with that, it's kind of like when you're taking over any investment. You want to make sure you evaluate the condition of the property. And so even though it's not required by law, we recommend a pretty thorough evaluation of your property by an expert such as an engineer. The developer is also legally obligated within 90 days following turnover to provide an audit of the association's financials from inception of the association through the date of turnover. So that's important. And then it also, I believe, is good practice to have your association's new accountant, somebody who is not conflicted, because now they're representing the association as opposed to the developer. Review whatever it is that the turnover audit is. It may not be another audit. It could be a different review or analysis, usually called and agreed upon procedures between the accounting firm and your association. But those overviews of the audits have proven helpful to most of our clients, because they do tend to identify certain issues. And then, of course, it may be possible for an association to pursue a claim against the developers or other professionals, contractors, architects, etc., that may have had a hand in the creation of the building. So very key points on turnover. We do webinars and presentations just on the turnover process and what to do. So if anybody is in that situation, it's important for you to reach out to Stephanie or to myself so that we can fill you in on what would be good practices post turnover. Now, the condo dispute resolution, this is provided for by the statutes. There are certain instances in which we are going to have no choice but to resort to condo dispute resolution processes. Chapter 718, in particular in section 718.1255, talks about what is subject to arbitration at the division of condominium and what is not. Basically, whatever is a dispute as defined by that statutory section I just referenced, whatever is a dispute will have to be filed by the association for arbitration with the division of condominium rather than going to court. If it is not a dispute, then we could go to court, though there's nothing that prevents us from going to arbitration. Similarly, if there's a recall that wasn't certified by the board, then that also needs to go to arbitration. There are other actions that might have, due to the rules of procedure or the court rules or other statutes, certain requirements for dispute resolution, but not in 718.1255. The collection of fines, assessments, or other financial obligations, including attorneys' fees and costs, that's something that won't go to arbitration. That's something that we'll end up filing suit for. Now, typical restrictions you'll find in governing documents for condos, which we will skim real quick through a lot of these, that we want to be mindful of, and you may want to come back to these to keep an eye on them, is what are do's and don'ts of sales and leasing restrictions. You should not assume that you have the automatic right to approve or disapprove purchases or leases. That needs to be specifically included in your governing documents. The courts very strictly enforce these provisions and do not look kindly upon associations that are trying to get away with denying rights of sales or leases when they don't have those rights. Pets. A lot of associations think they have the right to restrict certain types of pets or animals. Please be aware of the fact that there is this concept called emotional support animals or assistance animals. Those you have to remove yourself from the idea, from the notion that these are pets. If they are emotional support animals or assistance animals, they're not pets. Don't look at them as pets. Don't apply or construe that they are subject to any of your pet rules or restrictions, because they are not pets. They are akin to the wheelchair or the cane or the walking stick that the disabled individual may have to use if in the event of a disability. Towing and parking. Keep in mind that if you are going to venture into towing vehicles or immobilizing vehicles with a boot or other device, that you do so in compliance with applicable statutes, because there are statutes and local ordinances that govern things such as where the vehicles get taken to, what kind of signage and notice needs to be given. And if there is no compliance with these provisions, then there might be liability to the association. Antennas and satellite dishes. We do, as condo associations and HOAs, have, I think, a good amount of authority to govern this. But I also want to illustrate and emphasize that there are federal laws that regulate the extent to which we can govern over this. Electric vehicles in condo associations is something that is state mandated and governed on a statewide basis. We cannot prevent somebody from installing a charging station within their parking space, for instance. But let me also emphasize that the statutes that do give a lot of these rights to the individuals, tenants, or owners that want to install these charging stations are also very strict. And so we shouldn't think that we have to throw in the towel. But I do want to mention that we need to be very mindful of these types of requests. Condo maintenance and improvements, on the next slide, keep in mind the difference between what is required maintenance and versus alteration, right? It's one thing to maintain a building component. It's another thing to change things out and modify certain things. So whenever you're going to change the way things look in your condo, call your lawyer. You may not be able to get away with it as easily as you may think. You might need to get a vote of the owners, and by law, it's a vote of 75% of all the owners, unless your governing documents provide otherwise. And this is a very, very, very delicate issue. So keep that in mind. HOAs, you're a little bit more free here. You've got a little less restriction, but some associations, some homeowner associations do have restrictions on the type of alterations or improvements that can be made to associations. Now, the second to last slide that we've got is going to be what we call the COVID-19 slide. A lot of associations think that they have the power to automatically suspend meetings and all that. No, we have been able to avail ourselves of what we call emergency powers, which in effect result in the loosening of a lot of the restrictions that would otherwise govern the way we operate condo and homeowner associations. But we do need to take certain board action. Number one, to adopt or establish the emergency powers. Then from that moment, we say, okay, well, what can we do? Maybe we can now restrict access to certain amenities. Maybe now we could attempt to get away with certain restrictions, like the mandating the use of masks within the common areas or common elements. Maybe now we can mandate the fact that annual meetings or some board meetings may be suspended, or maybe we're going to do them all by Zoom or some other type of virtual or electronic platform. Whereas before we may have had to do them physically. So all of these things are new, let's say, developments in the operation of condominium association and homeowner association operation and governance that we have been establishing and learning about within the last year that the pandemic has become a thing. But you can't just assume that you automatically have the right to do it. There are certain procedures and steps that you and your lawyers should be following in order to best protect yourselves from doing this, and in order to adhere to the concepts that legislatively we should be governed by, which are transparency, allowing for the greatest extent of participation by the membership and by the owners as can be, while also balancing the need to continue the operation of the association and the affairs of the association as a going concern. So that is a synopsis of my COVID-19 slide. And then our penultimate slide, I guess, is what we're calling the bonus session on construction projects and related improvements, because we've found that this is an issue that is pretty critical to community associations, and that many of our clients have encountered. And at this point, I'm happy that James has rejoined us, or at least visually rejoined. At least I could see his face. So what I'm curious about with regard to construction projects, because I have my own take on certain things, but the first question on our slide is perhaps a little commentary, James, on how existing construction projects, in your opinion, have been impacted by the pandemic and the COVID era. I mean, I have my own 2 cents, but I'll let you chime in. I'll take a sip of water while you're responding.
Okay, great. And can you hear me okay, by the way?
I could.
Okay, great. Hopefully everyone else can as well. So we noticed a big shift in the way we do our regular business day to day within the condominium communities. That shift is heavily weighted toward safety measures. Nothing out of the ordinary, basic safety measures that have been implemented everywhere else regarding COVID. So it's a separation of people, right? If you have crews of construction workers on the job, you want to try and get them to the areas that are being worked on without having to traverse through common areas of the building, without having to cross paths with the residents in the building. Wash stations have been built throughout different areas of the construction site so that workers can constantly wash their hands. There's sanitizing stations in conjunction with these makeshift sink areas. Obviously, everybody has to wear masks throughout the entire time that they are on site. So these types of typical COVID measures have been implemented within any given construction site. Now, where I would say it's impacted the community's decision to move forward on a particular project is with interior projects, right? We have exterior projects and you have interior projects. The exterior projects seem to have been impacted less because you got construction crews on the side of your building working on concrete restoration, railings, balcony remediation, and so on. They're not crossing paths with the community. They're not traversing through common areas. They actually access their work area from outside, and we can get them to and from those areas without them ever even seeing a resident. So it works well, and it becomes quote unquote business as usual, if you will, right? Now, the interior projects, what we noticed is that some of these communities want to do one of two things. They want to either postpone it, because a lot of these projects are beautification projects, right? Aesthetic upgrades. And they have the ability to go ahead and postpone these things because they're not, if they're not a necessity. That was one thing that we've seen throughout the course of 2020. The other thing was communities deciding to take advantage of this and work through the planning and pre-con process, because during the planning and pre-con process, you really don't have to spend much time within the building. Maybe an occasional visit here and there from a design professional or a private consultant or your owner's rep, but that's really about it. And all the meetings are done virtually. So that was pretty simple to solve. And this was all intended to continue to make progress on any given project without actually executing the work within the common areas. For the few projects that decided to execute that work within the common areas, like corridor projects, elevator lobbies, main lobbies, or any sort of amenity areas, what we did was we coordinated with the contractor to limit the amount of personnel on any given floor, to limit how they get in and out of the building, right? Use of stairs versus elevators and so on, or designating one elevator to workers only during the working hours. These types of little extra steps that are pretty easy to implement when you're working in conjunction with the management companies and the board of directors. It makes it that much easier for you to execute these projects without creating a tremendous amount of concern with the residents. So these little measures can be implemented on any given project. And like I said before, for any of the communities that don't want work taking place inside their building, there's no harm in doing the planning and pre-con now. That's actually in their best interest to do so, to move the project forward.
Yeah, from my perspective, I've seen a lot of what you've described. I just, what we've from the legal perspective, we do counsel our clients that anytime we start deviating from the normal rules that we've all been accustomed to, right? That normal landscape of the condominium and homeowner association setting into this new pandemic mindset that we've been navigating for the past year, it has proven critical for associations to do so in conjunction with their lawyers, because what we have found initially, the reaction was everything shut down, everything stopped. We were asked to do so nationally. We were asked to do so on a state and local level. Everybody stayed at home, sheltered in place. Did what their duty was, and it kind of seemed like everybody bought into that, and everybody was fine with that. But that now, in retrospect, was a relatively short-lived time within this experience, and initially we were learning this, and we're still learning, throughout this process. Every profession has been learning throughout this process, but we started realizing that the longer this is going to take, the more likely we're going to have to start getting back to normal business, or kind of like as close to normal business as we can get into. The sooner we're going to have to start coming up with certain processes, like what you described. How do we allow realtors back into the building? How do we allow contractors back into the building? How do we allow visitors and guests back into buildings in a way that, like, again, life is going on, but it's life going on in a much different way that needs to be more mindful of the health, safety, and welfare of the people that work there, of the people that are coming to work there, of the people that live there. And so all of those interests need to be balanced now in a different way than were being balanced before. And so, to your point, things are taking longer to coordinate things, and owners are getting frustrated. Residents can get frustrated, understandably, but we need to manage those expectations as well. Contractors are getting frustrated. Contractors are getting affected. Contractors, cost of construction may be more pricey now. And initially, people thought, hey, there was no work initially, and now there's a ton. When people are going to have the opportunity, people are going to, these contractors, these professionals are going to be dying to do the work, so their prices are going to come down. Whereas what I've been realizing is prices are going up because you can't get supplies here, and so it's chains of supply and products are just so difficult now that the cost of projects in our buildings, the buildings that we represent, have proven to be very pricey, not to mention all of these other logistical issues we're encountering. So,
Right.
The next question, as far as trends, precautions, measures, I think you've touched upon some of these that professionals are taking to ensure safety of association residents during construction.
Right. And yes, that's right. So those are some of the measures that I mentioned earlier. And I'm sure that you see some safety measures being implemented in the contracts between the communities and these contractors, right? This way, making sure that the contractors or any vendor or design professional is maintaining their contractual obligations in regards to the agreed upon safety measures. So you may be adding certain language in your contracts that would cover that. We've seen a lot of language in the contracts that cater to the possibility of shutdown, right? Meaning the contractor has to shut down, demobilize, and remobilize as a result of another push
Right.
let's say a new strain or just some positive cases in the building in general. So there's been a shift in the normal business, but it's not anything that we couldn't get a handle on. And it's really it's a lot of brainstorming and logical safety measures that we put into place, and it seems to work pretty well. The communities seem at ease with the measures that have been implemented, and there's one area where I see a lot of residents are just not comfortable with, and that's entering their personal unit. If for any reason, if it's, let's say, a concrete remediation job and the repair is intruding inside to their personal unit, that becomes a little bit of a challenge, right? That's a highly coordinated activity where we have to keep the residents completely separate from the workers who are putting up those barrier walls between the workspace and the private space. So that was a little bit of a challenge, but again, just like everything else, we were able to get past that and provide a level of comfort to the community.
Those are key factors, which I think segues into the next question of the project manager role that you guys play. I think is instrumental to serve as guidance to a lot of the association board members and managers, because depending on what projects may be taking place in a normal world, or let's call it a pre-pandemic world, of course, that task was kind of like business as usual, though I would always say it was an undertaking, because you've got property managers out there that, when you hire a property manager, you hire them to do X, Y, and Z, right? Your status quo in a building is to deal with barking dogs, is to deal with buyers and tenants coming in, signing vendor agreements, dealing with unit owner requests, elections, scheduling meetings, talking to the lawyer about things that are going on, right? Your day-to-day, your status quo isn't larger jobs or renovations in buildings, so when you do add those projects into the mix, into the fold, are you doing that expecting your manager to handle it, and are you and is that expectation selling you as a condo board member short and setting up your manager and maybe some of the other staff in your property up for failure? So I would always recommend to our clients, at least those that would listen, to include as part of the budget, as part of the price, the engagement of a professional firm such as yours to assist in this process, and it's your expertise, it's your experience, it's your exposure that proves to be helpful in not only pushing things along and best administering and assisting associations in the administration of these processes, but it also, as I've seen, allows the managers to continue being managers and doing their job that they were hired for and are getting paid for properly, so that nothing on their plate ends up falling through the cracks, and then you guys come in. But what has been your from I guess an internal perspective, what has been your experience?
Yeah, well, you mentioned a couple of really important things. For starters, property managers, they have their hands full with the day-to-day activities and operations of running that building. It's not easy running a building of any size, for that matter. There's a ton of moving parts, a tremendous amount of personalities that they have to contend with, the rules and regulations that they have to abide by, and all the other activities that they're responsible for as per their agreement with the community. To take on a capital improvement project on top of those day-to-day operational tasks and responsibilities is, in my opinion, setting your team, your management team, up for failure, like you mentioned. Now, that's one issue that I see with trying to lean on your management company to manage a capital improvement project. The other issue is the legal portion of it, right? Are you putting your management team in an area of vulnerability, legally speaking? Well, you would know that better than I would.
Sure.
But are you putting your board in a position of vulnerability, legally speaking? Possibly. If you hire a third-party independent consultant, an owner's representative, to act as your eyes, your ears, your advocate, and give you the advice that you need to get you through this project as unscathed as possible, you're therefore, in a sense, you're pushing the liability off the board, the management team, and the community in general onto this third party. So that in and of itself is worth a ton. Aside from that, the owner's representative with the high level of experience and knowledge that they should have is going to have the foresight to keep you out of trouble, has the foresight to say, hey, look, if we go down this path, this is likely to happen. If we go down that path, we'll be able to avoid it. That's the type of guidance that you need. And it goes with each phase of the project, right? Your planning phase, your pre-con phase, your CA, your construction administration phase, and your closeout phase. For owners representatives, they do this on the regular, right? Especially firms like us who specialize in condominium associations and HOAs specifically. We've lived this so many times, right? And with that experience, that gives us the edge to have that foresight. And the foresight is worth a tremendous amount. So having an owner's rep project manager on board is, especially if the capital improvement project or whatever type of project it is of a fairly large size, it just makes all the sense in the world. Your management can manage the building. Your board can live their lives and make decisions with the information that's provided to them. They should all be well-informed decisions, and it keeps the process moving without leaning on any one entity in the building too much.
Yeah. It's been my experience. And so I'm happy that you mentioned it and touched upon it, because for those board members that have had the experience that didn't go so well, that are listening to us, they can probably, chime in and say, amen. And for those who haven't been down that path yet, soon they may find themselves down that path. And look, the truth of the matter is none of us want to spend money on any of this stuff, right? But it's a fact of life, right? When I get the news from the need to have to replace my roof, I don't want to get that bill, and I don't want to have to spend that money at my house. But if I don't, soon enough, I'm gonna, it's gonna be raining cats and dogs, like that black cat you just moved by. So
exactly.
but what we, but it's wise to include that, I think, as part of your budget, as part of the cost, much the same way. And I'm not saying it from a shamelessly promotional perspective, but much the same way as I recommend that the price of professional fees, such as lawyers' time to negotiate and review agreements, should be taken into budgeting and into account. Much the same way that I also recommend that boards ask and incorporate the pricing for payment and performance bonds. A lot of my clients are looking for ways to pinch pennies and shave costs along this process. But recently, over the last handful of years, or less than a handful of years, we've been seeing an uptick in the need to have to file claims on performance bonds in projects for contractors that have defaulted one way or the other on jobs. And in some cases where the clients did not pursue requiring performance bonds, there has been a much more difficult path for that association to follow. So I know that we're not going to get into the details of that now on this conversation, but those directors that are listening, whether they're going to be speaking to you or to whoever their construction manager is, or engineers or managers or lawyers, or whether it's in a conversation with me, they at least can ask us, hey, what is it that Robbie Blanche said about payment of performance bonds? What are these things? How do they work? Why are we looking into this? So that's something that we should at least put in the frontal lobe, I guess, of our participants here. Any other helpful tips you think, James? that we haven't touched upon with regard to embarking upon construction projects?
Yeah, sure. You mentioned the payment and performance bonds and the contract process and so on. If you're embarking on a large scale construction project, capital improvement project, call it what you will, do not make light of the planning and pre-con process. Time and time again, we see these communities say, you know what, let's just get this thing started. I'm going to call a contractor and we're going to see what it's going to cost. That's putting the cart before the horse. You need to pump the brakes on bringing contractors to the table. What you need to do is you need to hire the appropriate professionals. You need the appropriate owner's representative, the appropriate legal team, and the appropriate design professional team. And once you have those individuals in place, they can take you through the planning and pre-con process appropriately. I see time and time again communities stepping over dollars to pick up nickels, as we say, right? They don't want to spend the money in the beginning stages because they think that they don't need it. And then what happens once they get into construction, they realize that, wow, we didn't plan for certain aspects of the construction. Our contract that was written by the contractor, which we accepted, by the way, is not in our favor. There's no mechanisms in that contract to protect us. Like you mentioned, we didn't take a payment and performance bond. These types of things that people tend to overlook, either because they don't know or they're making decisions based on money right then and there, comes back to bite them later. Make sure your attorney is drafting your contract, not the vendor. Make sure that the contract is written well in your favor. It must be reviewed not only by your legal team, of course, but it should be reviewed by your owner's representative as well. That dialogue between the attorney and your owner's representative is important, right? It's those little words that are going to protect the association down the road. So if the communities want to stay out of trouble, my biggest recommendation is put in the appropriate time and energy into your planning and pre-con. And once you have everything organized, then you can start your construction and you will keep yourself out of trouble. Why? Because you will truly understand the scope, the cost, and the timeline associated with that project because you did your due diligence in advance. And that is going to help you manage the expectations of your community, which is key.
Agreed, 100%. I believe, and appreciate you for that insight. I believe that we are at the point now where we've reached the conclusion of our time allotment. Our email addresses and websites are up on the slide. I know that there are some questions up on our Q&A session. I've taken 2 of them and responded to them as James was speaking. I am going to do my best to address the remaining questions. If there are any other questions out there, what I would like to suggest is that feel free to email either James or myself. We will take them up, and I appreciate everybody for your participation. Thank you all very much, and I'm checking out.
Thank you, Robbie. Have a great day.
You too. You too.
Bye-bye.